All right, y'all. And good morning, good morning, good morning. Welcome to another episode of Money Matters. Today is, I don't know what today is. Today is Wednesday, February 3rd. I have been gone for a little while. Hopefully, you didn't miss me too terribly. I know that I felt dumber not doing these shows. So I decided it's enough to be dumb. It's enough of doing all the stuff that I was doing and come back and do this live. So welcome to another episode. Today we have all kinds of news. Everything has happened, it seems like, while I was gone. We're going to cover some of those pieces of what has been happening. But above all, we're also going to be covering and talking about what is happening in the news right now. And what is happening is that, well, we have quite a bit of stuff happening within the world of crypto and the world of finance. As you know, we had that giant Robinhood drama thing that happened with the, shorting of the stocks and pausing people from being able to trade and then kind of allowing them. And we're all learning quite a bit about what in the world does this all mean and what in a world is happening right now. So we're going to be discussing what's happening in the world of crypto, of course, and we're going to be taking a look at the prices. As you remember, we have started to kind of go on down. Things are turning. We are back. We are back. Things are turning around in our way and doing things that we actually want them to do, which is pump. And so we're going to be talking about some of the pumping stuff that's been going on. Of course, Bitcoin, Ethereum will always be stealing the limelight of what's happening just because they're the oldest and the biggest. But we do have some additional crypto and additional pieces that are happening, not necessarily inside the crypto market itself, but it is very much attached to it. And we're starting to see this collaboration or sort of a connection between the traditional markets and the crypto markets. And I'm going to be discussing on this show exactly what that means and what's going on. I do want to welcome everybody who is watching this live. Welcome, say hello, and let's do this. Woo, good morning. It's good to be back. I won't lie. Oh my gosh, I have missed it. I have missed it. And like I said, I felt dumber for not doing these things. So right now, I don't want to feel dumb anymore. So let's go in and take a look at the markets and find out what in the world is going on. Let us refresh and get a fresh new page of what's happening. And as you can see, over the last few days, Bitcoin actually has been pumping. And you can actually even see this tiny little chart where we're sort of this cup formation. We're starting to go back on up. And there's a good probability that we might actually break the latest all-time high of just short of about $42,000 plus minus. Ethereum is doing some amazing stunts right now. They're developing a brand new all-time high of like 1570 or so. We're slightly lower than that right now. So Bitcoin is currently at $35,976.63. Ethereum is $1,539.80. And if we take a look at the biggest performers over the last 24 hours, we do see that quite a bit of alts are actually doing really, really well. So the alt season has begun. It is here. People are definitely jumping on that train. And so here we go. I think we might see another sort of crazy alt season that we saw over the summer. We might see it right now. So is it going to be exactly the same with yield farming? Probably not. I mean, I don't think yield farming is going away, but I don't think we're going to see that. I think we're going to see something slightly different. What exactly? I don't know, but I do think it's going to be something slightly different. So we do have a few different coins that have pumped quite nicely. Phantom actually pumping 32%, UMA or Yuma, I don't know how you say it, 27.2, Sia Coin 20%, Terra 15, Sushi 11.4. And if you will remember, Sushi, when they did the sort of the rug pull or whatever, and then he felt sorry about it, and then they're taken over, has dropped below $2. Right now, sushi is almost $14. So this puppy has definitely pumped. Balancer is up 10.6%. Aave is up 10.4. Aave has been doing some amazing stuff. It's over $300. Last time we kind of talked about it on this channel, I think we were in 100 something. So as you can see, we're having quite a bit of nice pumps happening over the last 24 hours and even over the last week or so. On the losing end, we have only one coin that is negative double digits, negative 11.5, which is MDX. So I don't know what that is. My apologies for that. I feel like I should, but I don't. XRP is following as a negative 4.8. Alpha Finance is negative 3.6. So there's not a whole lot of on the losing end of things. And I think it does I do need to mention Dogecoin because it's one of those things that has pumped, and I think it came as a direct response of kind of what was happening with Robinhood. And you will remember quite a few months back, there was some sort of move with the Dogecoin, with the TikTok kids kind of trying to get it to pump to the new highs. And of course, it did go up and then it kind of went back down. And then we've seen Elon Musk kind of tweeted something about Doge. And then Robinhood thing happened with the GameStop. And of course, then they started pumping this puppy as well. So that's kind of what's been happening on this end of things. Now, I do want to take a look at some of the other markets. For example, gold and silver. Gold spot price is currently sitting at $1,836.40. Silver is at 26.71. They're kind of like sidewayish. I know that silver has actually done some pumping, and it sounds like we did reach almost $30 earlier this morning or yesterday, depending on where you are, I guess, in the world. But we did see a bit of a pump, and a lot of it again came from that Robinhood sort of wanting to kill the shorts of the whales. Well, we call them whales in the crypto world. Everybody else calls them institutional investors that have large holdings, but I think a whale fits the profile quite well. On the other side of the market, we're seeing the S&P 500 is slightly up, Nasdaq 100 is slightly up, Dow is slightly up, Russell 2000 slightly down, US dollar index is basically flat around $91 or so, and then of course Bitcoin index is pumping. We're going to be taking a look at some of the charts a little bit later in the show, but I did want to do just a big sweeping sort of what's been going on. Let's catch up. Let's take a look at everything. And we're going to be taking a look at specific two charts, actually three charts, Polkadot, Ethereum, and Bitcoin. And there's a reason for Polkadot that you will learn as we get into the news. So let's get into the news. And the biggest news, of course, we're going to start with the biggest crypto, which is Bitcoin, and the biggest sort of OG that is a new G, and that's Michael Saylor. So he's revealing huge corporate interest in Bitcoin as his corporate crypto conference begins. So as you know, today and tomorrow, he's actually holding a conference for all of the institutional CEOs and investors, CIOs, to kind of come in and learn how they can get Bitcoin into their corporate treasuries. So he's actually reporting that the companies are actually responding, and the number of signups for the event reveals there's a huge corporate interest. The most recent Bitcoin purchase also needs to be mentioned when we're talking about MicroStrategy and Michael Saylor, and that is that they have yesterday actually purchased 295 Bitcoin for $10 million. And of course, they purchased 314 Bitcoin in January, bringing total Bitcoin hoard to 71,079 Bitcoin. So yes, the company actually has invested $1.145 billion in Bitcoin to date. That's a billion with a B. So that's a very, very large investment. And of course, he is right now pushing the other corporate giants to basically do the same thing. Now, of course, I know that he's not doing this just to be kind to the community, because he also has a vested interest, because his average purchase is about 16,000, 17,000 per Bitcoin. We are what, at 33, 34, 35. We've been flirting in that area for a little while. And so, of course, for him, when there's a larger adoption, means that the price is going to go up. So that benefits him, that benefits MicroStrategy investors, and it benefits all the hodlers as well. So thank you, Michael. We all appreciate it. Going forward, we continue to plan to hold our Bitcoin and invest additional excess cash flows in Bitcoin. Additionally, we will explore various approaches to acquire additional Bitcoin as part of our overall corporate strategy. This is coming from Michael Saylor as a whole. So this is super bullish, and it does have this big thing that I think is going to push Bitcoin much higher, not just to the $100,000, but we could see $200,000 to $600,000. And I'm not the only one saying that. We are having some news from Guggenheim, and the CIO is saying that, hey, Bitcoin could reach $600,000. And of course, Winklevoss twins were saying 500,000. Max Kaiser is calling for 220,000 in this bull run. So we'll see what it's going to be. We don't know exactly what the price is going to be, but we all know that it is going to go much higher, and potentially in this bull run, meaning this year. So if you think about it, that we are right now at about $35,000, and if it does go to say $350,000, well, we have a 10x return on our investment, and that is super exciting. And another reason why you're like, if you didn't get it, maybe getting it does make sense. Again, not a financial advice. Nothing I say on this channel should be used as a financial advice. It's just my way of thinking. Scott Minerd, Chief Investment Officer at Guggenheim Partners, predicted that Bitcoin could eventually climb to $600,000 in his February 2nd interview with CNN. We did a lot of fundamental research, and if you consider the supply of Bitcoin relative to, let's say, the supply of gold in the world, and what we took value is, if Bitcoin were to go to this kind of numbers, you'd be talking about $400,000 to $600,000 per Bitcoin. And Raul Pal of Real Vision, I'm sure you know about him and the channel, is also basically saying that, hey, $500,000 per Bitcoin based off of this analysis does make sense as well. Now, one of the things that they are saying is that there is still a possibility for 50% correction. So, excuse me, you definitely want to know that bit as well. They did file with Securities and Exchange Commission to invest in Bitcoin via crypto asset manager Grayscale. As you know, they have this giant trust, and it's one of the easier ways to actually get into the crypto without holding the crypto itself. But of course, you are dealing with the derivative if you do that, and not with an actual asset. So there's some benefits and some downfalls to both sides, and we're actually going to be talking about that in a moment when I share with you something that has to do with Polkadot. Now, the filing did come into the effect on January 31st, which means that the firm can now, which is Guggenheim, can finally get exposure to this asset. Bitcoin has been on Guggenheim's radar for almost a decade, but the market cap wasn't big enough to justify institutional money. So when we kind of think about that, is basically the market cap and liquidity wasn't big enough for them to say, yeah, we're going to put some money in it. So now, as it actually gets bigger, as it continues growing, more and more institutions are basically going to say, well, now the market cap is big enough, and we do need to jump on this train. And the CIO also continues to stand by his earlier take that the institutional support is not strong enough for Bitcoin to hold above the current price level, which at the time of this particular article was $36,686 on the Bitstamp exchange. So he thinks that, right now we're not seeing it as strong. So he believes that there is still a possibility that we could see a 50% correction because the rally got too hot and too fast. And we got to consider that we did go from about 20,000 to about 40,000 Bitcoin in about 1 month. And that is a max short-term speculation. So that's something that you should keep in mind. And we did say that when we were talking about this particular asset within the space, that we did jump up and we did come down. And I think this might be a good time for us to take a look at the chart and kind of see where we are. And let me actually change the display, por favor. so that you can maybe see it a little bit better. So what we're looking at over here is the Bitcoin chart. And here is kind of where we were. This is the December 31st, right? We did pump up to about 42,000. Not quite. We didn't get there, but that was sort of the high. We did come down and sort of created this triangle that we're actually breaking out of. Now, you might be wondering what this line is. And if you recall back, a few weeks ago when we actually did the show prior to me having to go away for a little while, we did do something a bit different and we played with Elliott waves, right? And the Elliott waves is basically kind of, as you know, it has these three stages, three peaks, as I like to call them. It's five stages, but it's three peaks where it kind of goes up. That's number one. Then it comes down. That's number two. Then it goes up into the second peak, which is stage number three. Then it goes down, which is number four, and then it's five, and that's typically really high and explosive. And as you can see, I'm still scrolling on up, basically saying there's a good potential we could go to about 200 something, $300,000. So this is kind of one of the pieces that you want to take a look into to see where we are. And as you can see, this is something that we've done before. I haven't adjusted it. I just added this line over here at about $30,000 as sort of this local bottom that we have been flirting with over the past month or so. That, clearly we keep on sort of hitting. Maybe we go slightly lower, but then bounce right off of it. And as you can see, we are actually following this. So is it possible that this was the bottom and then it's going to adjust? Yes. Is it also possible that we're going to follow what Guggenheim had said and go from about 42,000? My little thing is indicating about 22, 23,000 dollars per Bitcoin. Yes, it is still possible. And I just want to point this out because I think it's very, very important for us to kind of understand this bit. We don't know exactly how things are going to play out. As you can see, right over here in this particular part of the chart, when we went from March of 2020 till about early January of 2021. So we're talking a vast majority of the year. We traded well below the Elliott sort of line of what should be happening. So could it be possible that we're going to be trading above it slightly and kind of skip it and then we go from here on up? Yes, anything is possible. So just something for you to pay attention and to acknowledge of kind of where we are. So I think that that's really important. The other news about Bitcoin that I think is really important has to do with Ukraine. So their energy ministry is basically discovering and trying to figure out of how they can actually utilize their nuclear power to connect it with Bitcoin mining. This is really powerful, and I know some of the other folks have been talking about this quite a few months ago on their channels. Ukraine's Ministry of Energy is weighing the possibility of creating a cryptocurrency mining center that will be powered by a surplus energy produced by its local nuclear power plants. Minister of Energy for Digital Development, Digitalization, and Digital Transformation basically said, quote, "The future lies in the latest technologies that can be used to balance the energy system while benefiting financially. The constant load on nuclear power unit could bring additional profit to the state-owned Energoatom, sorry about that, and enable business to operate, which will also pay taxes to the domestic budget." So they're basically saying, well, we got to utilize this stuff anyways. Could we attach somehow Bitcoin to this whole thing? Hold on, let me change this. Maybe this is better. Could we attach Bitcoin to this entire thing and, also make some money alongside with it that we could actually utilize to pay some taxes, take care of the domestic budget, and, if they actually end up sweeping it into their sovereign treasury, just like Michael Saylor is doing it for his corporate treasury, now they're actually building additional components that gives them a fighting power with this global, basically the basing of all of the fiat currencies that we're seeing around the world. So this is really interesting and something that could be really, really powerful for Ukraine. And of course, if they end up doing it, there could be another country that also figures it out and they end up doing things as well. They are saying that they are doing proper due diligence, and that needs to be done, and I agree with it. I believe that all of us should be doing a proper due diligence before you actually end up doing anything. So they're saying, well, we got to do due diligence right now to figure out how it's going to work and what are some of the factors and effects that this could bring in. And so they got to evaluate all of this stuff before they make any final decisions. But I think this is really, really powerful and really, really, really important on the whole spectrum of what is going on. Now, here is the piece that I think it's very important for us to talk about when it comes to Polkadot, and it has to do with 21 Shares. 21 Shares launches the world's first Polkadot ETP on Switzerland's SIX exchange, SIX. The world's first ETP, which is exchange traded product, which is tracking the performance of Polkadot, will see the light of the day on February 4th, 2021, courtesy of 21 Shares AG. The firm will release product on regulated Swiss stock exchange and will be fully backed by DOT tokens. Now, this is really cool and really, really powerful for a couple different reasons. One, that while I do believe that holding on to the physical crypto is really, really important, for some investors, for some traders, this doesn't always make sense because you also have to think about the taxation rules. And so if the taxation rules are really, really high, which they can be and they are in many instances, ranging anywhere from 20% in the US on the long-term hold, meaning 1 year plus 1 day or more, all the way to like 30, 40, 50% in other parts of the world. Whereas we do have some of the things that are within brokerages like ETNs, ETPs, and ETFs that are taxed at a much lower rate. In some instances, the tax rate could be less than 1% around the world if you hold the ETP as opposed to the token itself and benefit from the investment from it. And then in other cases, like US, for example, ETF, ETP, ETN could potentially be part of your IRA, right? Your retirement, which depending how you structure it, could be basically zero taxation, whether you end up going the traditional, which means it's deferred until the time where you actually start making the withdrawals, or if you go with the, my gosh, the brain has stopped working. Um, the other version of it where you pay taxes now, but then you don't pay taxes on the gains. And yeah, clearly I did not have enough coffee today to remember that. It's going to come back to me. I can't believe that I actually forgot. So my apologies for that. But I think you know what I'm talking about over here. It's so crazy when your brain just stops working, and now you get to witness it because we're doing it live. No editing, no tweeting. I can't go look it up. It just is. But I'm pretty sure you know what we're talking about here in this particular instance. So what they're saying is that the ETP structure means that the investors will benefit from 100% physical collateralization without holding physical tokens. So they will give money to 21 Shares. 21 Shares buys the token. You end up selling it. 21 Shares sells the token, and you basically gain or lose depending on what you ended up doing. 21 Shares doubles down on its support for Polkadot as the company admitted the blockchain project into its hodl basket as the second largest constituent after Bitcoin. The CEO of 21 Shares highlighted the DOT tracking ETP comes as a result of skyrocketing demand from institutional investors towards various cryptocurrency assets. Quote, after investors purchase the first Bitcoin through our ETPs, there's a natural transition to invest in other crypto assets. And you know what? This is really important because we see that not just obviously with 21 Shares and the ETPs or ETNs or potentially ETFs eventually coming as well, but it also we see it roll out in the crypto world of the like actual crypto holding, right? Like where you hold your keys and hold your wealth in the crypto. You actually hold the crypto, not the derivative of it. Where we see it, people kind of come in and then they get their Bitcoin or, fraction of the Bitcoin. Or if you're Michael Saylor, then you get like 10,000 Bitcoin on your first go. But then, they spend a little bit of time and they were like, ooh, maybe I should get some Ethereum. And then they get Ethereum and then they start exploring. And then they get some of the other ones like Polkadot. And then they started going deeper and deeper into the altcoin forest and start developing and discovering all these new different projects that exist. And then when they like the project, believe in it, believe in what they can do, then they start investing into it. We've all been there down that road, I would argue. Maybe I'm wrong, maybe not everybody, but many people have done that. And of course, Grayscale was also saying the same thing. They're saying that there's a interest in Polkadot related product, and the company recently filed documents in Delaware to enable the release of Polkadot Trust. The price of dots, which is the ticker symbol, if you would, of Polkadot, has been on a roll since late December when it dabbled with $5. In the following months, the asset almost quadrupled its value to a new all-time high and became the fifth largest cryptocurrency by market cap. So let's take a look by market cap, and you can see the Polkadot is right here, currently is at $17.79. And we're actually going to take a look at the Polkadot right over here, and you can see that it was sort of like when it first rolled out, it was like just shy of $3. Then it kind of, went on up to 6 something, came back down, and it was basically mostly about $3 to $5. It was kind of boring, anywhere from about September until about Christmas or so, and then it kind of started going on up. And as you can see, it has actually gone up in the last 30 days. It's going sideways. So it's right now, it looks like it's accumulating, and there are many people that are very, very bullish on Polkadot and what can do, because it does have a great leadership team, and there are many new projects that are being sort of worked on and being developed on top of the Polkadot ecosystem. So I know that there is quite a few different tokens that exist out there that do give you additional components of if you're wanting to play around within the Polkadot ecosystem. So some people just decide to kind of do that stuff. Some people decide just to do the the Polkadot holding of that asset. And then there's people that are obviously developing and people that are getting into the altcoins that are being built on top of the Polkadot ecosystem. So that's one of the interesting pieces that I wanted to share with you. Now, speaking of Switzerland, I think it's time to go back there, because there's something else that is also very exciting, and it has to do with NFTs. I am personally very excited about NFTs, and I know that right now, or up until this point, predominantly has been within the gaming industry, and it has been within the art industry. But my biggest bullishness within the whole thing is actually connecting the digital world of the NFT that allows us to do that with physical assets. And this is exactly what this article is talking about. We are seeing the first tokenized asset for trading under new national blockchain rules in Switzerland. So there's a new legal provision on distributed ledger technology went into the effect on February 1st in Switzerland. And of course, Swiss Digital Asset Bank, Signum, and Fine Wine Capital AG launched collectible premium wine-backed tokens, becoming the first ones under the new blockchain rules. Assets tokenized through the platform will be recognized under a new category of ledger-based securities in the law. And what you're able to do then is you can actually go in and trade this stuff if you want. So, right now they're actually dealing with wine right now. And what they're saying is the Swiss Federal Act on the adaptation of federal law to developments in distributed ledger technology allows companies to develop a framework that links financial and real asset ownership to a decentralized ledger technology-based asset token. So, of course, from the co-founder of the Fine Wine Capital is basically saying, quote, tokenization of wine assets enables us to expand our private collector investor base to new private and institutional investors interested in fractional ownership in distinctive real assets. This provides them the opportunity to hold, trade, and request a physical settlement of this unique asset in an efficient manner. So basically, tokenization of the real assets, I know that there's some people that are very excited about it like me, and then there's also people that are petrified of it. They're saying no, you don't want to do that. But I think there's a benefit to it all. It's kind of like gold, right? Gold, you can hold the physical possession if you want to grab a bar, but then you got to figure out where to store it and what to do with it and how to maintain it and pay for that storage. Or, and there's benefits to it, right? Or you can get into a derivative, a paper version of gold, where you can buy something like, for example, GLD, which is a an ETF that just follows the price of it. And now you don't actually have to worry about whether you got to store it and any of that stuff. Like, it's all paper version of the whole thing. You benefit on the price of the asset. You can exchange it, buy it, sell it easily without kind of holding it. Again, there are risks and benefits to both strategies, but I think as we sort of look into the crypto world as a whole and the technology that it has and what it can actually do, I think that there's huge benefits to this whole component. I know for me personally, and part of the reason why I have been gone is really spending a lot of time of developing some of these technologies and working, with a team to kind of get these puppies rolling out. And if all goes well, Q1 should see something rolling out within it. And when we come a little bit closer to the whole darn thing, I will be sure to share with you. But we do have some recent cases of tokenized asset. We have a core ledger that announced that they will work with Abacus to set up a digital barter economy in Argentina, which is going to enable farmers to tokenize their agricultural assets to seek a hedge against rising inflation. In Russia, we already covered this before. Nornickel in December of 2020 stated that they first stage of issuing digital coins that involve metal contracts, and they're going to be dealing with palladium, cobalt, copper mining, and explorations. So as you can see, this is the stuff that is definitely happening. There are some of the additional components that are also being developed within the NFT world, with luxury goods, with high-end brands, with the I want to say diamonds are starting to do it. I want to say, don't quote me on this, but I want to say that it was Louis Vuitton and Gucci that were dabbling with it as well, of basically saying this is a way that you can certify that this is a genuine product issued by us, as opposed to a knockoff that you can find. And sometimes we know what the knockoff is because, they spell Gucci slightly differently, and, it looks like Gucci, but it's not really Gucci. But what they're doing is that they are saying, no, 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 no. We want to make sure that when you own this puppy, you know that you own this puppy right now. In the US, I think there's an important piece because I've been talking about the CBDC coming to the US as well. And here we go. We do have some news with that. The US Federal Reserve apparently, allegedly, posted a job saying, hey, we need to we need to hire. They're probably going to fire somebody too, but we need to hire somebody to help us focus on CBDC and stablecoins. So they actually posted the job that you can find, I believe, on LinkedIn and probably some of the other areas. There's about 30-ish people or so that have applied for the position thus far that we know of. But the applicant is going to be in charge of emerging payment, clearing, and settlement systems for the Fed. One of the hired manager's key responsibilities will be overseeing the Fed's involvement in emerging tech-based systems. Specifically, the regulator is seeking to oversee the changing nature of money and payment platforms. So here you go. As you can see, the Fed is definitely taking the stablecoins very seriously. We're going to see way more regulations than we've seen thus far, and we're going to be seeing some of the other components developing within the world of the stable coins, including the CBDCs. As you know, they're being everywhere. US is basically saying, we're not all that crazy about it, but they're starting to research it. And I think that, I still stand behind the thing of that they might develop something on their own, or they just might actually leverage USDC, USDC as their token potentially. One of the other pieces that I don't have necessarily news here, but I did see it a little while back, has to do with the fact that USDC stablecoin is starting to see a bit faster adoption than Tether for the first time in history. And so that's kind of an important and interesting conundrum that is happening. Visa, of course, is jumping on the whole train with sort of providing some of the payments and playing around with it. And of course, they are partnering with USDC as well. So we're seeing quite a bit of developments that are occurring within this world. One of the other pieces that I think it's very, very important to cover, and I would be amiss if I didn't share it with you, and that is that we're seeing some interesting component happening within the US Bitcoin exchanges. One of the things is that the mainstream are coming on and they are here and growing, and we're seeing that the Coinbase, with all of its faults, with all of its challenges, is becoming one of the top sites and one of the top apps when it comes to anything finance. So you can see that they actually are listed here as number 3. First one is Robinhood still. Second one is Webull. Third one is Coinbase. Then we go into Cash App, Fidelity Investment, TurboTax, and so on. One of the interesting pieces that the article does talk about is that the Coinbase had 1.3 million app downloads in January, which is more than E-Trade, TD Ameritrade, Charles Schwab, Fidelity, and Sophie combined. This is absolutely huge, but I also want to point out one interesting component, that E-Trade, TD Trade, Charles Schwab, Fidelity, Sophie have been around for a bit longer than Coinbase. And some of these names, I mean, E-Trade, I remember I was in college. Goodness gracious, I am aging myself here. So we're talking well over 20 years for some of these platforms, E-Trade, TD, Ameritrade. So Charles Schwab, of course, has been for forever. Fidelity, same thing. So something to kind of point out is that Coinbase is much, much newer, much, much younger than some of the companies that have been listed here. But one of the things that I think it's important to understand, especially if you're an entrepreneur, that not always bad news equal that it's bad for business. Any publicity is good publicity. That is one of the things that I've learned a long time ago from one of the best PR giants in the world, and it stands the truth of the time. Like you see over here that I have highlighted right here on the screen, that you can see that even though there is system outages that Coinbase is experiencing throughout the year and all of that stuff, popularity is still unaltered. Same thing over here. You can see Robinhood is number 1, even though it has had a lot of bad publicity, that people have been talking about how they're being limited and they're selling the data and they're front running you and all this stuff. It's still number 1 downloaded app in the world of finance. So I think that does bring up the point that, hey, no news is bad news and any publicity is good publicity, even if it's bad. This week did see a large withdrawal from the exchanges to private wallets. This is incredibly bullish because, as we know, when folks and when institutions take their money out of the exchanges, that means that they're going to be hodling for a while, which means the supply is going to go down, which means the price has only one direction to go, and that is on up. And that is what has been happening for a little while and likely will continue, especially if we are expecting to see this 200, 300, 400, 500, $600,000 per Bitcoin. The price will definitely have to go up. One of the interesting pieces coming from the on-chain CEO of on-chain analytics resource CryptoQuant, Ki Yong Ju, is saying, quote, 32.4 thousand was the bottom and the Bitcoin price surged 13%. But as I said, institutional buying is the strongest bullish signal overriding all bearish signals. I expect it will go up even more. And I think it will because, probably right after Michael Saylor has his days with his CEOs and institutional investors and teaches them the tricks of how do you buy this stuff and not tell anybody and how you do it without moving prices much. And then we're going to see this game theory play out really nicely, where they're going to try to front run each other, right? Of like, all right, we're figuring out how to do this now. I need to buy before hundreds of other people that are sitting on the same call that I am on are going to do the same thing before the price goes on up. So being first does pay off very, very frequently. And many of the VCs and many of the institutional money investors and many of the smart money already know that. And the powerful part and a really cool part about Bitcoin and crypto as a whole is that it gives that power to us mere mortals. So one of the final articles that we have for the day before we go into some of the chart for the ETH is that we are seeing that the Bitcoin is actually growing much faster than the internet, and we are projected to have 1 billion users by 2025. That's 4 short years from here on out. That's not really a long time. It sounds like it is, especially in the world of crypto, because you're like gone for a couple of weeks and everything has changed, but it's really not. There's a lot of noise happening on the daily basis, and if you can actually remove yourself for a little bit and sort of take a breather and take a look at something a little bit larger, you will quickly realize that 4 years is really not all that much of a time. Now, one of the interesting pieces that they're saying is that internet is amongst one of the most notable and valuable inventions of the 20th century. I absolutely agree with it. And most people started utilizing during the 21st century, interesting enough, right? It was actually invented somewhere in 1960s. So it took a while for it to actually grow and develop. So kind of put that in a perspective of what's happening with the world of crypto. As you know, Bitcoin being the first, it was in 2009, and now we're in 2011. So if you kind of compare it, we're basically in 1970s, maybe 1980s of the internet revolution. And look at where we are right now. And one of the pieces that while I was away, that really kind of has hit home that I wanted to share with you is that I had recognized that, while this whole pandemic with COVID and everything else is pretty darn sucky for so many different reasons, it's also quite beautiful that it happened when it did. And I know you're thinking, like, what have you been smoking while you've been away, Neb? But think about it. Had the COVID happened in the early 2000s or in the 1990s, we would have been in a much tougher position, right? I mean, think about it. Right now, we do have technology that we can leverage in 2020, right? Think about schools. Could you go and, like, online? No, you couldn't do the online schools because that part wasn't developed. The working from home, the food delivery that we are experiencing, all of the stuff that technology has enabled and really sped up, we didn't have that 10, 20, 30 years ago. So if you kind of think about it, if it had to happen, I'm kind of glad it happened in 2020 as opposed to the 1990 or 1980 or even 2000. We're much further along with the technology and the internet, and it is quite beneficial that, if it had to happen, that it happened when it did. So if you know anything about me, you know that I will always find a silver lining in everything. It's just how I am wired, and I truly believe in that stuff. But let's continue with the article. Now, the adoption of the internet had a very challenging and sluggish start, as it took about 3 decades before number of users grew to about 120 million. Recent data compiled by the popular crypto analyst Willy Woo shows that this is roughly Bitcoin's current user base as well. He combined the data from Cambridge Center of Alternative Finance and Glassnode and presented the most conservative estimation of 135 million users. What he's saying is that the Bitcoin adoption, while it's still super, super early, it's growing faster and faster. And he's projecting that if Bitcoin remains on the path, we will be reaching first billion user milestone in 2025. Internet did so in 2005, about 4 decades after its creation. So as you can see, we are definitely collapsing this stuff. And as you can see, we're still pretty darn early in this whole thing. Bitcoin is still early, and I agree. And I know that there's a lot of things that are still developing, and we've been at it for a while. But if you really kind of think about it, this article is super cool because it puts things into the perspective. We really are. And even the Bitcoin's market cap of over 600 billion is still far behind the world's most valuable companies and assets like gold and M2 money stock and global institutional real estate and all of that stuff, right? But we did beat some of the most valuable companies, right? We are right over there above it. And this is just Bitcoin, right? The market cap for all of the crypto is well over 1 trillion as of this morning. Kind of flirts right around 1 trillion. As the prices go up, we go up. As the prices come down, we go down. But this is kind of where we are. And so this is an important concept to really think about it, that if you think that you are late, if you're just starting out, you are definitely not. We still have quite a bit of room to go when it comes to Bitcoin, but also when it comes to something like Ethereum. Speaking of Ethereum, let's take a look into this puppy. Much younger than its bigger brother, Bitcoin, Ethereum is also performing really, really well. As you can see, we did go this sideways action from early January up until early February. So for about a month, it was kind of upward trend, but kind of sideways. And we did come to the brand new all-time high and are performing really, really nicely. So let me zoom out or a little bit so that you can kind of see where we are. This is a reminiscence from something else that I was drawing on, surely. And as you can see, with this is 2019. This is the 2020, and as you can see, this is this beautiful cup formation. If I was to actually zoom out to all, you can actually see what is going on. You are looking right now at the 1 month candles, and here is that sort of U formation that is quite beautiful. Now, this does look very, very bullish when you look at it in this chart, but if we were to switch over to logarithmic, as you can see, it's mostly flat. There's not much happening over there. And on the logarithmic end of things, we didn't move all that much. We didn't move all that much at all. As you can see, sorry. We didn't move all that much at all, and so this is still the early ages and early stages of the whole thing. I am incredibly bullish on Ethereum, and I think that Ethereum in this bull market could do something very similar to what Bitcoin did in 2017, 2018, when we went from about $1,000, $1,500 to about 20,000 by the peak. I think Ethereum, being that sort of has this sort of slightly behind component, does have a potential to do the same thing here, which is pretty darn exciting. Again, not a financial advice. I don't know how things are going to play out. I don't have a crystal ball. I can't predict the future. I truly can't. But I do think that it does have a strong potential. And so do I think that Ethereum could easily hit 5 to 10,000 in 2021? Yes, I also think that it could actually reach as high as potentially 20,000, especially when we get into that super late stage where everything goes virtual and vertical. And when we see that piece, we could see it sort of go into this super bubble territory and kind of hit that sort of high, and then of course we're going to come back down. It's not going to be a straight line. We're still going to see some ups and downs, and I will be sure to be there for those ups and downs alongside with you. So that's it for today. Thank you so much for joining me. I super appreciate you. I hope you have learned something new. If you are brand new, do subscribe to the channel if you enjoyed this. If you like this video, smash the like button. Help me out. More likes, more people get to see it. We help more people learn about crypto, which means they more invest in it. And if you're invested in it, that means that your bags grow as well. So it's help me, help you, help other people. This is the beautiful part of the world of crypto and the triple win, which is what I always strive for. Until tomorrow, stay forever money blessed, and do remember, you are only one deal away.